comes as earnings for some of Nvidia's biggest customers, those large cap tech names, have been a bit mixed. Our next guest, though, seeing some opportunity, saying that the volatility represents a reason to buy. Joining us now, we want to bring in Antoine Chakaiban. He is a technology infrastructure analyst at New Street Research. Antoine, it's great to have you here. So it looks like you recently upgraded Nvidia to a buy. You've got $120 price target on the stock. And this comes at a time when it seems like many investors are still waiting on the sidelines when it comes to Nvidia. What makes you bullish at this point?
Thanks, Sean and Matthew, for having me. So, yes, I would say that, first of all, since the peak of June, Nvidia's stock has pulled back by nearly 30%. So that's underperforming most other semiconductor stocks that are exposed to data center AI. And the reality is that, even despite the concerns, the recent concerns on the company, the Blackwell delay, concerns around macro, we still expect Nvidia to dominate the data center XPU market. And we see in-house XPUs doing well as well, like companies like Amazon, Google are developing their own in-house XPUs. We also see alternatives to Nvidia GPUs like AMD's GPUs also ramping, but we expect Nvidia to remain dominant in a market that is growing very, very fast. And so I would say that we see little downside to expectations for Nvidia's data center revenues. We see little downside to valuation, given the stock is now trading below the trough multiple of the 2018-2019 down cycle. And so that makes it a very good investment at the moment.
I want to talk about what we've heard from some of Nvidia's biggest customers. As Shauna was mentioning, you've got Microsoft, Meta, Alphabet, and Amazon contributing about 40% of Nvidia's overall revenue, and that's according to Bloomberg estimates. If Wall Street was frustrated by the AI ROI story that we heard from those four big tech names that I mentioned, couldn't that hurt Nvidia too?
Yes, so I think the right way to look at it, so yes, you mentioned 40% of total revenues. NVIDIA actually also discloses, that the large cloud service providers represent, about half of their data center sales. If you look at how much capex for the top 4 hyperscalers is set to grow this year and next year, and you unpack that, between investments in AI, investments in traditional infrastructure, well, it's true that we still need to see a bit further revisions to what consensus is expecting for capex growth next year to make room for NVIDIA to be able to meet expectations, but not that much revisions, maybe 10, 15% actually. Yes, of course, whether capex can keep growing at such a pace beyond 2025 is a question mark. It will depend on the pace of adoption of generative AI-powered use cases. It will depend on the monetization of all the investments made over 2023, 2025. But reality is that even if we conservatively model a significant slowdown in investments in 2026, 2027 by these giants, that still makes room for...
As the week began, investors were fleeing to safety throughout the globe from the markets. Growth stocks that had experienced the largest run-up are often the most severely damaged stocks in any sell-off. Nvidia is a manufacturer of cutting-edge chips. The market has recovered somewhat this week, but the stock that was riding high has now dropped by almost 25% from its all-time high closing price in mid-June. However, a Wall Street expert believes that investors have a fantastic chance as a result of the decline in Nvidia shares. According to Oppenheimer analyst Rick Schaefer's most recent research note, if he is correct in his prediction that Nvidia stock would hit $150 a share, investors might profit by roughly 50%. Rumors that a flaw in Nvidia's next Blackwell chip will postpone its release later this year intensified the dumping of the company's stock over the weekend. When it comes to artificial intelligence, AI, initiatives, clients that want the most processing power possible are likely to be drawn to that chip and its design. If those rumors are accurate, however, Schaefer of Oppenheimer believes investors shouldn't be alarmed. This is because to the fact that Nvidia will leverage any delay in releasing Blackwell to help meet the overwhelming demand for its current H100 AI chips. Schaefer stated in his research note that Nvidia's competitive position is still strong and that a small delay won't result in any share losses. In our opinion, Nvidia is in the greatest position to profit from full-stack AI hardware and software solutions. Schaefer's remarks are entirely logical. There appears to be a significant discrepancy between Nvidia's present chip capacity and the increasing demand. Although rivals will contribute to somewhat closing that gap, Nvidia ought to be content to keep selling its current CPUs. Blackwell is only going to increase those sales even more. Because of this, the Nvidia stock correction presents a buying opportunity. With all these developments under consideration and analyst predictions, we'll talk about target projections and advice in today's video, so make sure not to miss out. However, before you do, if you'd like to stay up to date on Nvidia's most recent updates and the most recent news from the stock market, you can subscribe to our channel. We publish daily updates about the biggest shifts in market catalysts, so click the bell icon button to ensure you don't miss the most recent updates. All right, back to today's video.
Nvidia and other chip stocks surge over 5% Thursday as tech led a market rebound. Joining us now with more on the sector is BofA Securities Senior Research Analyst Vivek Arya. Vivek, great to have you with us. I know we highlighted the 6% gain that Nvidia saw yesterday, but if you take a look for the week, Nvidia is actually underperforming the Philadelphia Semiconductor Index. Nvidia's down about 2%, and the SOX is up almost 3%. And there have been doubts since probably that June 20th key reversal date where Nvidia shares hit a new high and then closed on lows, where the stock has really been struggling. So where do you come out on how the stock is valued and if there was just too much hype in the stock?
Good morning, Melissa. So I think practically speaking, whether it's NVIDIA, whether it's the rest of the semiconductor space, we could stay volatile until NVIDIA reports later this month, and we have the required reset in any delays associated with their new Blackwell chip, which I think is actually not that big. But if we take a step back, we have to separate what's happening in the market from the fundamental side. I think what's happening in the market and the volatility has nothing to do with semis. But this is where all the gains were because AI was the best game in town. And that's why these companies saw the most drawdown also during this volatility. But let's look at the fundamental side. Number one, every one of NVIDIA's top customers, whether it is Amazon, whether it is Meta or Microsoft or Google, they all said they are investing more, not less, in AI. Number two, if you look at NVIDIA's top supplier, Taiwan Semi, they had very strong outlook. In fact, this morning they gave very strong guidance for their last month of results. And number three, if you look at NVIDIA's top system partner, Supermicro, I know they got dinged on the margin side, but if you actually look at the sales growth that they showed for the next 12 months, up 90%, that is 2 times what people are modeling for NVIDIA's growth, and NVIDIA usually outgrows them. So I think the fundamentals are still extremely strong, but the market is going to go through its volatility, which we think should subside by the time NVIDIA reports its results, because the fundamentals are very strong. And the final point on valuation, if I take the Mag 7 outside of NVIDIA, they are trading, and the broad market, it's trading roughly 2 times its earnings growth for next year. NVIDIA is trading 0.8 times, right? So it's trading less than 30 times for over 35 to 40% earnings growth. So I think fundamentals are strong and valuation is still very compelling.
The shine on Nvidia appears to have worn off. The stock has dropped about 25% from its peak, which was reached just a few weeks ago. A significant shift from July occurred when about 1/3 of Wall Street analysts polled by LSEG in August said they no longer advise purchasing Nvidia stock. It may be time for some investors to move on to more promising opportunities. I think the reverse is true. What makes Nvidia a good investment even after its sharp decline? Ask Amazon, Microsoft, Meta Platforms, and Alphabet, the parent company of Google. At their most recent quarterly updates, the 4 leaders in artificial intelligence, AI, all sang the same tune. Additionally, Nvidia stockholders ought to enjoy their musical selections. On July 23, Alphabet released its results for the second quarter. During the Q2 earnings call, CFO Ruth Poratz stated that the company's capital expenditures were primarily driven by investments in our technical infrastructure, with servers accounting for the greatest portion, followed by data centers. She also stated that capex in the following quarters of this year would be at or beyond the $12 billion mark from the first quarter. When questioned about the high levels of investment in AI infrastructure, CEO Sundar Pichai responded. In response, he said, "Even in situations when it turns out that we are overinvesting, the risk of underinvesting is far higher than the risk of overinvesting for us here. On July 30, Microsoft released its Q4 fiscal 2024 earnings. In the company's earnings call, CFO Amy Hood stated, "We will scale our infrastructure investments with FY25 capital expenditures expected to be higher than FY24, in response to the growing demand signal for our AI and cloud projects. Approximately 50% of that amount will go into purchasing servers for AI and cloud models." Next, Meta released its Q2 report. "We presently anticipate considerable capex increase in 2025 as we invest to support our AI research and product development initiatives," CFO Susan Lai said in the Q2 call. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video.
And I guess that's the key part of the equation where we'll get some more guidance from NVIDIA. In terms of the reports of the delay to the Blackwell chip, the reports first came out of the information. And I'm wondering, it's interesting because when we hear about delays to other hardware items, you think about it, is it going to be a sale denied or a sale delayed? So in your view, these are sales that will be delayed, correct? That these sales will actually happen. It's just maybe it's pushed out a quarter, 2 quarters, whatever.
Yeah, so if we look at demand for NVIDIA's Hopper product, which is the product before Blackwell, demand for that is off the charts right now. And that's what we heard from Supermicro. They got it well above consensus, and a lot of that is actually based on the Hopper product. Because we just have had this period of insane supply constraints in the industry. And just because Blackwell is delayed a little bit doesn't mean the supply constraints have gone away. So any customer who can put their hands on Hopper is still able to buy that product. Now, when it comes to Blackwell, there are many different versions of Blackwell. The most extreme versions that are in the highest, most densest version of the rack scale architecture, they are perhaps pushed out by a quarter or so. So that, I think, can be reflected in numbers. But when it comes to other versions of Blackwell, I do think that they will start to ship some Blackwell later this year. But the key point is that demand in combination of Hopper and Blackwell, I still think is extremely strong.
On August 1, Amazon released its Q2 results. CFO Brian Olsavsky stated on the company's results call, "We expect capital investments to be higher in the second half of the year." He went on, "We continue to see strong demand in both our non-generative AI workloads and generative AI workloads. So the majority of the spend will be to support the growing need for AWS infrastructure. Amazon, Microsoft, Meta, and Alphabet all intend to keep making significant investments in infrastructure linked to AI." That's fantastic news for NVIDIA, since it most likely indicates increased sales of its GPUs or graphics processing units. It's true that these large corporations use some of their own AI processors. Google has its own specialized AI accelerator called Trillium. Azure Maya is offered by Microsoft. The meta training and inference accelerator, or MTIA, is Meta's proprietary artificial intelligence chip. During its Q2 call, Amazon highlighted its Trainium and Inferentia chips. But let's be clear about this. These titans of AI mainly depend on Nvidia. That is not going to alter in the near future. It's probable that reliance on Nvidia will soon grow. The Blackwell GPU architecture from Nvidia is far superior to anything else available. Upon the new Blackwell-based chips release, Amazon, Alphabet, Microsoft, and Meta are expected to be among the first to obtain them. Jensen Huang, the CEO of Nvidia, has high hopes for Blackwell. It might be the most popular product in the company's history, he predicts. I think he'll be proved correct, and Amazon, Alphabet, Microsoft, and Meta will all play a part in making it happen. The information's claim regarding a delay in shipping Blackwell chips because of a design defect may worry some investors. Other than confirming that it anticipates a spike in production of the new chips in the second half of 2024, Nvidia has not responded to the rumor. The report might be accurate, but I'm not sure. CFO Colette Kress stated during Nvidia's May quarterly report that Blackwell will be made available to international partners later this year. But Pichai mentioned in Alphabet's Q2 call that the most latest Nvidia Blackwell platform will be available on Google Cloud in early 2025. However, Nvidia should only see a little Blackwell delay. Overall, the company's prospects shouldn't alter. And if you pay close attention to what Microsoft, Amazon, Alphabet, and Meta are saying, those prospects ought to hold up rather well. With all of these considerations, Nvidia is unquestionably a great buy, especially if you're looking to invest for the long term because the company hasn't reached its full potential yet. What do you think about Nvidia stock? Is it a good buy at the current price? Please share your opinions with us in the comments section, and don't forget to let us know what you think NVDA is worth. If you're interested in learning what other companies like Nvidia have been up to lately, click on the next video on your screen. We'll see you there.